Friends, welcome to our second session on the chapter PGBP, that is Profit and Gains of Business and Profession. Previous class, I had given you a brief introduction to the topic. We have understood what is the meaning of business, what is the meaning of profession, vocation, etc. We have also understood. And also broadly, we have understood what are the various kinds of income which are included under this. We started primarily, in fact, I had shown you the contents of section 28. Section 20, we had visited to the Income Tax Department website, and therefrom we had seen Income Tax Act, and in that act, section 28, I had shown you. Now today we'll start the topic by discussing those various components of section 28. Let us understand in detail what are the various items they are included under this head of income. Now, I'm going to share the screen with you. Meaning of profit, various methods of accounting, what is income computation and disclosure standards. Briefly, I had explained you. Now, this is what exactly we are going to learn today. Income chargeable under this head. Briefly, we had discussed. You see, a list of items are there under section 28. Okay, in fact, this head of income, that is profit and gains of business and profession, starts from section 28 and ends on section 44B. All these provisions we may not be able to cover, and that is also not required for us. I will give you, but broadly, I will show you the list of those sections at some point of time. The first section, which is the charging section, it is section 28. As you see, various items are there. Previous class, we have seen it in the act itself. First item which is included under this head is income from business or profession. That means if the assessee is generating some income, either from a business or from a profession, that income will be included under this head. Head is profit and gains of business or profession. And here you have to keep it in the mind that the business profession may be carried on at any time during the previous year. This means it is not at all necessary that business should be carried out throughout the previous year. If it is carried out at any point of time, still it can be included under the head profit and gains of business and profession. Hope you have understood this concept. Now let us move to next item. In case you have any query, you can raise it, raise your hand, or you can ask directly, or you can unmute yourself and ask. Now, second component of section 28, as you can see, this deals with compensation. Compensation or other payment which is due or received by certain persons are there. If these people have received some compensation, that compensation amount will also be taxable under the head profit and gains of business or profession. Who are those people? Any person, by whatever name called, managing whole or substantially whole of affairs of an Indian company, or the affairs in India of any other company. That means it may be an Indian company, it may be a non-Indian company also. If it is Indian company, if the person is managing a whole or substantial whole of the affairs of an Indian company, or if it is a foreign company, this person is managing the affairs in India. By whatever name called, he may be called as the managing director or let us say anything. Okay, then if he has received any compensation, okay, why he will receive compensation at all? In connection with termination of his management or office or modification of the terms of conditions relating there. If there is some, if this particular job is terminated or it is modified, the terms are modified, he may be receiving some compensation. That compensation will be taxable under the head profit and gains of business or profession, PGBP. Okay, so this is one example of compensation. Secondly, a person, by whatever name called, holding an agency in India for any part of the activities relating to the business of any other person, at or in connection with termination of his agency or modification of terms and conditions relating there. That means if the person is holding an agency in India for certain activities, he is agent of any other person. Okay, and he is receiving compensation in connection with the termination of his agency. Either his agency contract is getting terminated or agency contract is getting modified. For this termination or modification, if he is receiving any compensation, the compensation will be taxable under the head PGBP. Then, third kind of compensation or other permit is that any person who is vesting in the government or in a corporation owned or controlled by government or under any law for the timing in force of the management of property or business. That means the person is having some property or having some business and he is wasting that business or wasting that property with the government or with a corporation which is owned or controlled by government. In these cases, and if the government or that corporation is giving some kind of compensation, the compensation will be treated as income and taxable under the head PGBP, profit and gains of business affairs. This is one more kind of compensation. Fourth thing is that any person by whatever name called at or in connection with the termination, modifications of the terms or conditions of the contract relating to business. That means if there is a business contract and the business contract's terms are modified, okay, or the contract is getting terminated and the person is receiving some compensation. That compensation is included under section 28. That means it is taxable under the head PGBP. Okay, friends, now first of all we have understood point number 1 under section 28, as you see, income from business and profession. That means profit and gains which are earned from business and profession, that is taxable under the head PGBP. Second thing is these kinds of compensation, they are also taxable under the head PGBP. Hope it is clear up to this. Now, third category of income which is included under PGBP. Income from specific services performed for its members by a trade, professional or business association. So you see, there are certain trade associations, professional association or similar association which may be rendering some specific services to their members. If they earn some income out of this kind of association, if they earn some income, then that income will be taxable under the head profit and gains of business affairs. That will be included as their income. Okay. Normally, we have a understanding when we have understood the concept of income at that time. There was a concept we have learned that income of a mutual association will not be treated as income. Okay, mutual association like let us say clubs, chamber of commerce, stockbroker association, etc. If mutually some activity is done and there is some surplus, that will not be treated as income. But here we are not talking about any surplus. We are talking about if any income is generated by some specific activities. That income will be taxable under the head PGBP. That is the third category of income. You have to keep it in mind. Okay, so this income which is generated by trade, professional or similar association for specific services will be taxable, and this concept is an exception to the general principle that income of the mutual association out of the surpluses are exempt. So it is a general exception. Fourth item which is included under this section is that incentives received are receivable by the assessee carrying on export business. If a person is carrying out some export business, he is entitled to some certain benefits. For example, you see profit and sale of an import entitlement. Import entitlements, if he has exported something, he is entitled to import something free of customs duty. Certain duties will be exempted to him. Since he has exported, he will get a license, he will get an entitlement to import it. If he is an importer or if he is actually using it, then he can use that benefit. Is it not? But if he is not an importer, then what he can do? He can sell it to outsiders and he can get some profit. So any profit is realized from sale of this import entitlements, that will be also taxable. Right? Next is cash assistance against export under any scheme of Government of India. If Government of India is providing some cash assistance against export, then that cash assistance amount will also be taxable under PGB. Third, customs duty or excise, repaid or repayable as drawback. The government allows certain duty drawbacks. You are paying duty, but you will be able to withdraw it. And that will be treated as income under this PGBP, profit and gains of income, profit and gains of business or firms. So any custom duty or excise duty drawback repaid or repayable by any person against export, that shall be treated as income. Fourth point for this export business is that profit and transfer of DEPB, that is Duty Entitlement Passbook Scheme. This is again a scheme where government gives benefits. You can, if you export, you are eligible to take some credit of duties, which can be utilized. And if you are using, fine. If you are not using, you can transfer it to some other person also. Okay, that earlier this scheme was there. So if somebody has done this thing, DPB, you have transferred and some profit out of this, that will also be taxable under section 28. Consequently, that is your business or from standing. Okay, this is the fourth. All these things related to incentive received on an export business. The fifth item, which is included under section 20, is the value of any benefit or forfeiture. If a business house has received some benefit arising from business or in exercise of a profession, some non-monetary benefit he has received. Is it doing business or education profession, but certain benefit he has received. That will be treated as a business. Okay, suppose you are a professional practitioner, somebody has gifted you something in your professional capacity. So that is a benefit or forfeiture. So that will be treated as income and taxable under the head PGBP. Item number 6, sum due to or received by partner of the farm. You know, when a partnership farm does a business, partnership farm pays remuneration to its partners if it is permitted under partnership deed. Remuneration may be paid in the form of interest, salary, bonus, commission, and other forms of remuneration. Okay, so when these are paid by the farm, so these interest, salary, bonus, etc., they are expenses for the business. That means expenses for the farm. So those expenses will be allowed, but the same amounts are income for the partners. Farm is paying salary, so from farm's point of view, that is an expense. But partner is receiving salary. For partner, that is an income. Okay, of course, there are exemptions up to certain limit. Okay, but that income, that remuneration, suppose partner is receiving salary from the farm, that will not be taxed under the head salary. We have already understood this earlier also. So this will be taxable under the head PGBP, that is profit and gains of business and profit and gains of business and profits. So interest, salary, bonus, commission received by the partner of the farm shall also be taxable as business income under the head PGBP. And here one more additional point you have to receive. You have to keep it in mind that you see these expenses are allowed subject to certain conditions and certain limits are also prescribed under income tax law. Okay, certain conditions should be there that it should be allowed, it should be specified in the partnership date like this. And let us say interest amount maximum 12% is allowed, and profit also depending upon the profit, how much one can distribute, that limits are there. Okay, so if for whatever reason, if any amount, any remuneration paid to the partner which is disallowed to the farm, right? Farm has paid remuneration, but it is disallowed. Disallowed means income tax authorities is not allowing that expenditure as an expenditure. That means what? Farm is paying tax on this. If farm is paying tax on it, the same income will not be again taxed in the hands of the partner. Okay, so any expenditure to the extent it is disallowed by the farm will not be taxable in the hands of partner. There will not be any double taxation on that income. Okay, this point you have to keep in mind. Okay, so to explain this, let us take this example. Suppose a firm pays interest to a partner at the rate of 20%. Simple, on its capital, it pays 20% interest. But Income Tax Act allows interest max up to 12%. That means extra 8% has been paid. If extra 8% is paid, extra 8% will be disallowed. Disallowed means on that extra 8% will be treated as income. It will be added to the income of the farm, and farm has to pay tax on this. Okay, since farm is paying tax on this, same interest will not be chargeable to tax in the hands of the partner. Okay, since the excess interest has suffered tax in the hands of the farm, the same will not be taxed in the hands of the partner. I hope you have understood this concept. Right? Yes or no? You can reply.
Yes, sir.
Thank you. Now, next item. Item number 7 of section 20. Any sum, whether received or receivable, in cash or kind, under an agreement. Okay, if certain sum is received under agreement, and this agreement is related to certain things. First kind of agreement is that for not carrying out certain activity. If you have entered into an agreement with someone for not carrying out certain activity, normally it is a kind of anti-competition agreement that you will not compete with the business. If that kind of agreement is there, and in connection to that, you have received some sum, right? And that sum you have received, it is relating to carrying out some activities in relation to business and profession. Therefore, that will be taxed, and that will be included under income under the head profit and gains of business and profession. Okay, but however, categorically, it has been specified that the following sums which are received or receivable shall not be chargeable to tax under the head PGBP. What are the certain sums? Any sum, whether received or receivable in cash or kind on account of transfer of right to manufacture or produce or possess any article or thing, or right to carry on any business or profession which is chargeable under the head capital gains. That means if you have received some sum which is chargeable under the head capital gain, that will not be included under section 28. Okay, meaning you are transferring a right to manufacture or transferring it to right to produce, right to process, and that right is treated as a capital asset. If the right is treated as capital asset, then any gain you are getting out of transfer of that capital asset, that will be taxable under the head capital gains. So if it is treated as capital gains, that will not be treated as a business income here. That is one point you have to keep in the mind. Second thing is that if some compensation received under this thing, United Nations Environment Program, that is a specific program, that is this compensation is received from the multilateral fund of monetary protocol on substances that deplete the ozone layer. On this specific under this specific scheme, if some compensation is received from United Nations Environment Program, that will also not be treated as business income. Okay, so these two are exceptions you have to keep it in the mind. Otherwise, any sum received for not carrying out any activities are treated as a business income. That is one. Second thing is that any sum received for not sharing any know-how, patent, copyright, trademark, license, franchise, or any other business or commercial right of similar nature, or information or technique likely to assist the manufacture or processing of goods or provision of services. So these kind of, you see, most of them, they are like in intangible assets. So know-how, patent, copyright, trademark, business or commercial right. Okay, if certain compensation is received for not sharing this thing, or some is received for not sharing all these things, then that money which is received for not sharing this kind of assets shall be treated as income under the head profit and gains of business or profession. Okay, I think these two items are clear to you. Now, next let us move to item number 8. Any sum received under Keymen Insurance Policy. Keymen Insurance Policy is a kind of insurance policy which is taken on the keymen. Keymen means very important persons in the office, in the business. Okay, business depends on them. They are very important persons. If they, let us say, leave the business, or if they die, the business will be suffering a lot. Okay, business may face losses. So that kind of situation is that. If that is so, then the business may be interested in taking insurance against them. Right. So if any sum received under Keymen Insurance Policy, you have taken a Keymen Insurance Policy and some money has been received, including bonus on that policy, shall be taxable as income from business. Here, friends, you have to keep certain things in the mind. Then the money which is received from Keymen policy, it will be received by the beneficiary. The beneficiary may be the person himself. Suppose he's an employee and he may be the beneficiary. Beneficiary may be the business, that the company may be the beneficiary. Or if the person dies, sometimes beneficiary may be the person's legal heir. So if money is received by the business, then it's a business income. If money is received by the employee, then that will be treated as salary. If the money is received by the legal heir, then that will be treated as income from other sources. So this point also you have to keep it in mind. So there are three possibilities that money received from Keymen Insurance Policy may be a salary income for an employee. It may be business income for a business house. Here we're talking about the business income. Or it may be an income under the head income from other sources if money is received by the legal heir of the employee. That these possibilities are also there. Okay, so next item is fair market value of inventory and conversion and capital asset. Fair market value of inventory. As you are aware, inventory means stock, and here we are referring to closing stock. So if your business house you are having stock, okay, that stock position is used for stock position is relevant for computation of profit, right? So as you know, how we arrive at the profit, we take sales plus value of closing stock. Therefrom, we deduct the value of opening stock and all expenditures, provisions, etc., and we get finally profit. Okay, so sales and closing stock value we have to first pick off. Therefrom, opening stock and all expenditures or provisions needs to be deducted, and we will get from. Okay, so closing, you are having some stock. So stock is, you can say, comparable with your sales. You can say the value of stock is realizable at some point of time. And if you are converting that stock into capital asset, that means you are having inventory, but you are saying it is no more inventory, it's a capital asset. I will transfer it from inventory to capital asset. In that case, this is as good as selling your inventory. Okay, so just like sales realization is taxable, when you convert inventory into capital asset, the value of inventory is also taxable under the head PGBP, that is profit and gains of business and profits. Okay, and how to know the value? You have to arrive at the fair value of the inventory. So fair value of the inventory on the date of its conversion or on the date of treatment of capital asset, it needs to be determined in a prescribed manner, and that fair value will be chargeable to tax as a business income under the head PGBP. I think it is clear to you. Next concept is sum received on account of capital asset referred under section 35 AD. 35 AD will be learning it later. Certain assets, if certain business house purchases for some specified businesses which are mentioned under section 38, not all businesses, certain specified businesses. If you purchase some assets for those businesses, then what happened? You can claim depreciation, and renter asset can be claimed as expenditure in the same year itself, in the year of purchase itself. Normally, when you purchase asset, what you do? Asset is treated as a capital expenditure, and every year depreciation amount is claimed in the profit and loss statement to arrive at the profit of the business. But if it is a 35 AD business, that means business which is mentioned under section 35 AD, you will be seeing it later on. You can also check it. is section 35 AD by visiting the income tax department website. And certain capital assets are purchased, okay, and that has allowed us deduction. That means entire amount is allowed as a deduction. And after that, the capital asset is demolished, destroyed, discarded, or transport, sold, anything. That means you have claimed entire benefit. After that, you are transferring the asset and getting some money. If that is happening, then any sum received on account of transfer of this capital asset shall be treated as income under the head profit and gains of business and funds. Okay, so these are the list of items which are included under section 20. In this context, friends, we also need to understand one more concept, that is the concept of speculation business. If you refer to section 28, there is an explanation, explanation 2. In the previous class, I had shown you that explanation also. That explanation says if the person is having doing some kind of speculation business, income needs to be computed separately. That needs to be treated as a distinct and separate business. So your speculation business and non-speculation business needs to be the income from speculation business and non-speculation businesses needs to be computed separately. Why it is so? Because there is one more concept. There is concept of setup and carry forward losses, which is dealt in section 73. We have separate videos on that, how to set up and carry forward separate business losses. If you want, you can watch those videos available in our channel. That section, that is section 73, provides that losses in the speculation business cannot be set off against profits of any other business. That means if there is a loss in speculation business, you cannot set it off against profits of non-speculation business. But however, loss from the speculation business can be carried forward to subsequent years. And in subsequent years, it can be set off against the profits of any speculative business only. That means it can never be set off against any non-speculative business. Therefore, there is a need to compute the profits of speculation business separately. Okay. So that point you have to keep in the mind. You have to keep it in the mind always that the speculative business is distinct from non-speculative business. Now you might be thinking that what is that speculative business or what is that speculative transaction? This means it's a contract for purchase or sale of any commodity, including stocks, shares. Okay, and in that contract, what happens? The transaction is periodically or ultimately settled otherwise than actual delivery or transfer of commodity or scripts. So normally this transaction happens in a derivative market. You can think of something, it is a contract to settle the transaction otherwise than actual delivery. That is called as speculation transaction. Here what happens, the person who deal with the transaction, they are actually not interested with the base price, the price of the asset. They want to get some benefit from the price fluctuation. Okay, so they settle the price fluctuation among themselves without actual delivery of the asset. For example, let me give you an example. Suppose you got a building. Okay, I am purchasing that building for 50 lakh rupees with the condition that I will sell you back after 6 months. Okay, actually, physically, I am not purchasing that thing, but we have entered into an agreement that I will purchase it for 50 lakh rupees. But let us say after 6 months, the value of the building becomes 55 lakh rupees. Okay, my condition that I will purchase and sell you back. It becomes 55 lakh rupees. The transaction will be settled without actual delivery. Now, you are supposed to give me 55 lakh. You give me the difference of 5 lakh rupees. Okay, that means I purchased 50 lakh. I sold it at 55 lakh. Difference 5 lakh rupees you are supposed to pay. You give me 50 lakh. Or let us say after 6 months, the value of the building has gone down. It is not, let us say 55 lakh. It is 48 lakh. Then I am incurring a loss. Is it not? How can I incur a loss? I will be giving you 2 lakh rupees. Transaction is settled. Actually, there is no delivery. This is an example how speculation can happen. Without delivering a particular commodity, you can do transaction. Hope you have understood this. This is an example of speculation transaction. Okay, in derivative market, when you buy futures and options, The transactions are in nature of like this. Okay, but there are certain exceptions. There are some transactions which shall not be treated as a speculation transaction. But the example I gave you, this is an example of speculation transaction where transaction can be settled without actual delivery. Okay, and so far as this topic is concerned, PGBP, you have to keep it in mind that the profit and gains of speculation business needs to be kept separately and distinctly from non-speculation business. Now, friends, these are certain transactions which shall not be treated as speculation transaction. These examples I'll be showing you right now. One is hedging contract for raw material and merchandise. Hedging means if you are entering into the subcontract to avoid the losses of price fluctuation. You may entering into some forward contract and future contract, so that losses relating to price fluctuation in raw materials and merchandise are not suffered by you. So that will not be treated as speculation contract. Similarly, hedging contract for stocks